First of all, a big thank you to the TOKEN2049 organizer. Thanks so much for putting together such an amazing collection of speakers, and I'm sure the audience are in for a big trade. So I have a lot of questions prepared for all this, our Stella panel. But before we jump into those questions, I want to give each of the panelists some time to quickly introduce themselves. First, I'll start with me. So I'm Emma. I'm the CEO of LongHash Ventures. We're a Singapore-based Web3 fund. We also have an accelerator. So if you're building early-stage crypto projects, definitely hit us up. Well, pass it on to Justin.
Hello, I'm Justin Sun, the founder of Tron. I'm also the ambassador and the permanent representative of Grenada to WTO. So I focus lots of the times on regulations and collaboration with sovereignty states.
Thank you so much.
Hey guys, Saurabh Sharma. I'm head of investments at Jump Crypto. Jump Crypto is a very active infrastructure builder in the crypto space, a very active investor and a trader. We have a lot of efforts going on and a ton of picks and shovels in blockchain infrastructure tooling building. That's kind of our North Star, and then have been investing in the space for a very long time.
Thank you so much.
Hi guys, I'm Constance. I'm the Chief Operating Officer for FTX. I'm primarily responsible for the growth of the business.
Great to have you guys. I think, I'm sure you guys are no strangers to the audience. I think FTX, Jump, and Tron have been making a lot of headlines when waves in the market and help to push the industry forward. I think given the title of today's panel is about the future of crypto and navigating the decade ahead, which I think it's pretty impossible to look into the decade ahead. But let's try to do the impossible here. Maybe let me start with Justin, and I want to hear from the rest of the panel as well. What are some of your bold predictions for the next decade, and how should we navigate if there are some of those challenges?
Yes. So for me, I think we need to learn lots from traditional institutions. So I think that I get into crypto around 2012. So actually, this year is the 10-year anniversary for me to get into crypto. So I think for the first year, I think definitely our mission is to drive mainstream attention to crypto. But for the next, I think 10 years, it's become the mainstream, right? But still, I think we still have some gap between these two objects. First of all, I think there is lots of things we need to learn from traditional finance industry, because at the end of the day, I think crypto is the same with the traditional finance institution, because most of things we are doing here is to control people's money or move people's money, or basically we have a huge financial responsibility. So that's why when I first started in crypto, I wear like hoodies, slippers, right? But after start from this year, I wear suits. I think maybe give people a little bit confidence on the services we provide to them, right?
That's super interesting. So next 10 years is where we cross the chasm, I guess.
Yes.
Saurabh?
Yeah, I think, I mean, first of all, I'll say that, we believe that, the next cycle of computing innovation is going to be driven by crypto. So there's a lot of exciting kind of R&D work going onto it. And we are very optimistic that crypto has the potential to unlock this completely new sort of model of governance, which is going to involve communities who are going to be involved in, kind of determining what behaviors are permitted, how networks grow, and most importantly, how the economic value is distributed. Right? So that's kind of the fundamental first principles belief of why we are in the space and excited about the space. It's obviously a very interesting, very large distributed systems problem on the technical side. I think that drives a lot of interesting work that Jump does. It's a very difficult sort of computer science kind of challenge, but it's a very big outcome on the financial and the economic side as well. But I think, as I said, it's talking about a decade is a pretty hard thing to do. So everything I say is with obviously a grain of salt. But there are some early signals you can take on, a few things that you see. I mean, I would say the first thing probably the killer use case application has been stablecoins. So we'll see that. I think they have seen pretty good mass adoption, and I think we'll continue to see them scaling up. And I think probably in relatively next few years, I believe we'll surpass the $1 trillion supply on stablecoins, and that could be any form of things, combination of obviously the private stablecoins, the CBDC conversations, and then potentially other sort of experimentation in at least niche form, as much as I can say. So that's probably the biggest one. I would say related to that, built on the stablecoins, I think the complete payment stack will be revamped, and that's a huge sort of fintech activity that I think we expected to see, and that's probably relevant for everyone. That's relevant for banks, the merchant networks, the card networks, because once you have the stablecoin rails, again, or even the federal banking system is kind of looking at that digitally, you have to kind of rewrite those applications completely. So that's kind of on that side. On pure infrastructure side, I think we will continue to see multiple sort of compute and execution environments and blockchains continues to flourish or scale up. But I do expect many of them to become hyper optimized for application specific stuff over time. And I think on the purely on the economic side, I would say business models for creators are going to completely evolve with a lot more ability for them to drive how the payment models and modalities is going to work, how they're going to be participating in the e-commerce with the creators, either creators or even users from a data perspective as such. And I'd say there's a subtext to that. I think the kind of the scaling up of kind of this new form, which is NFTs, right? Which we've seen mostly PFPs. We're going to evolve from PFPs, and I think almost every consumer brand, every entertainment, every gaming company is going to involve these NFTs into sort of their user engagement or customer acquisition models. So I think those are the predictions. Challenges, I think, are many. On the technical side, I think we are so early in solving the kind of the scalability, security side of it, and there's a lot of work going on there. Regulation is going to be the significant challenge because, connecting the thread of nations and then more importantly, global coordination on this is going to be super tricky, and it's important, but it's going to be very tricky. And then the economic models are still kind of being iterated upon. The tokenomics model and the token incentives are still super early. So there are a ton of challenges far ahead as well.
Yeah. So there's a lot of, I think, high potentials, right? Like you were saying, robust infrastructure that's going to be hyper optimized for future application. Then stablecoin, definitely as one of the first killer use case, I think, of crypto is going to continue to grow. And of course, I think the next generation of Web3 applications, like you mentioned, right? Creator focused applications and everything is going to flourish. But of course, challenges ahead as I think this whole space grows, regulators are going to come in. So I think, would love to hear from Constance how you're thinking about this.
I think what I really like to see for crypto in the next decades is really around mass adoption. It is no point for crypto to be there if people don't use it, or if blockchain technology is not being adopted massively. And that's a lot of the efforts that I believe everyone in this room is trying to push forward every day. And it is just a collective effort that we need to keep building things, and we need to keep educating people around us, educating TradFis, regulators, what crypto and what blockchain really is, and how crypto and blockchain can help them to move on to the next stage. Because if we really look at the society nowadays, we don't really have major advancement in the past decades. But for society to be there, the society as a whole has to move forward. And I think that's a lot of what we are trying to do here. We are trying to think about how we can help the other industry players to collectively together move the crypto space, not only crypto space, but as a whole technology space and traditional financial space to the next stage. And I think it will be really, really exciting to see that every crypto and blockchain becomes part of our life, and all the current major platforms typically becomes matching engine for P2P activities. So P2P no longer is just on transactions, but it could be on social activities, it could be on gaming activities, it could be just part of our life. I think that would be really exciting to see for the decades. But of course, it takes a lot of efforts to build, to educate, and also to work together to build the crypto pie bigger.
Yeah, definitely well said. I think it's unanimous among you guys that next decade is probably where mainstream adoption will happen, but to get there, lots of challenges. So I would like to maybe take a step back and talk about technical challenges, right? And I think all of you guys either have a part of organizations that have either launched alt layer, layer ones, or you have invested heavily into alternative layer ones as a key infrastructure to power the entire Web3 economy. So I would love to hear from you guys. How do you think this space is going to evolve? Maybe I can start with Saurabh.
Yeah, I think the general sort of the trade-off design space of solving for this kind of blockchain sort of trilemma around security, decentralization, and security. I think it's pretty high dimensional and pretty broad for any single blockchain to cover, right? And I have my own version of maybe a fourth dimension, which is called generalizability. In addition to that, it's very hard to be, and then you have further than applications built on top of that, which are also very specific. So it's very hard for a single blockchain to be able to sort of serve that and get optimized.
Yeah.
So that's why we fundamentally believe in multi-chain future, and then hence sort of enabling cross-chain infrastructure to make it a seamless user experience. And hence we'll continue to see strong and smart teams coming up with their own kind of design models of solving this in a different way, and then hence we'll see more L1s, so to say. We'll see more roll-ups to solve the scalability aspect to that, and so forth. And end of the day, as I mentioned, I think it could take multiple forms. I think we've seen this in the past too. I mean, if you go back, there were multiple protocols, obviously, Gopher and TCP/IP and a bunch of other, and they didn't all start with the same standard, right? And then they kind of converged to some agreeable form. And so this doesn't have to be that way, at least this early on. We're still pretty early in that phase. We're kind of, I call it sort of maybe at the 1995 of internet in terms of building infrastructure. And so it's unfair to assume that any one single platform you can take bets on is going to solve multiple sort of applications. So that's kind of maybe the fundamental thing, that we will see a multi-chain, cross-chain narrative, and then we will see over time these platforms start optimizing and picking their lanes. And there is no real good comparison, but lack of better words, you can think of as a multi-cloud, multi-compute environment, and you're kind of optimizing across all of these. We see those infrastructure in Web2 quite common, and this is obviously, you can consider every blockchain or L1 as a large big computer or large big cloud, and you're building applications across many of them.
Yeah. And I know you were telling me just off the stage that Jump took a very technical approach to support the projects and ecosystem as well. You guys have 150 engineers building wormholes and all sorts of solutions, right, to support the ecosystem.
Yeah, I mean, I think for us, Jump Crypto has evolved. I think technical R&D infrastructure building as a North Star. I think we've taken kind of a view and a position that we are going to be very much involved in building the core Web3 infrastructure and very deeply technical primitives that at least we view are the big bottlenecks in unlocking the scale and the potential of this ecosystem. And obviously, we are not the only ones. There are amazing folks and community members across. I mean, Ethereum community is phenomenal, and the merge is obviously a great testament of how that kind of panned out. But we have a strong team, and we continue to grow that team across the stack, ranging from networking stack to obviously work at the zero-knowledge cryptography level. And that is a pretty important North Star for us as a fundamental sort of work that we do.
That's fantastic. And I want to ask the question to Constance, because I think FTX has been pretty heavy into a few layer ones. And recently, you guys also bet big together with Jump into Aptos 3, right? So how are you guys thinking about this space? What are the methodologies, right? You guys are...
So our investment logic is really to look at what are the teams and possible technologies that would move the mass adoption forward. And because we deeply believe that each chain there's gonna have their own ecosystem. So currently, apparently, due to a lot of concerns on the cross-chain, there's still a multi-chain world, and our logic is to help all the infrastructure to be really great so that people can build on top of it. So that's why we are really heavily helping the layer ones to build out the foundations for builders to build. But of course, I believe the multi-chain world is kind of like the iOS and Android or Apple and Windows world. So it could exist separately and individually, but it will be great that if they can cross-function. So I actually really agree with Saurabh on what he was saying. So that's a quick summary of that.
Fantastic. And now on to Justin. I think you're the only one here that have launched a layer of your own, Tron. So just want to hear from you, how you guys, do you think the future is going to be multi-chain, and how are you guys positioning yourself for a future? Yeah.
Yes. So first of all, I think basically even we have different choice of the blockchain. Actually, I think the blockchain kind of these days merge with exchange business. So you can see you have like DeFi application, so you can making trade like lending and spot and future exchange on blockchain as well. So so basically, I think at the end of the day is financial services, right? Basically, it just depends on different infrastructure. I think this is the key for blockchain development. For Tron, I think our focus always first in like stablecoin. We collaborate with all the major stablecoin issuers, issue stablecoin on Tron, and we have our own decentralized stablecoin USDD. And also at the same time, we have DeFi. I think our TVL right now is the second largest protocol. And also, of course, like NFT and all the new things, you know, in the space, we are doing it. And also, we have our own exchange platform, Ploniax, and also collaborate with lots of CeFi exchange to provide all kind of the services for users. But I think for me, I'm more targeted to basically our competitor, like traditional finance institution, like banks, insurance companies, like and the investment platform, rather than our competitor, right? Other blockchain, because I believe our space is still very small space. I think around $1 trillion, but traditional finance industry is probably like tens of hundreds trillion dollars. So that's why I think this is more like a future, right? So we move forward to become a mainstream financial institution.
Yeah, yeah. I think in crypto, everybody is very collaborative, right? Because like you said, even though everybody have grown super multiple times, but we're still small compared to traditional finance, and there's a lot of scope to grow together from there. And a nice segue, because you were talking about the key primitives in layer ones, right? You talk about exchange, you talk about stablecoin. So I want to kind of, the next question is gonna be around stablecoin, because I think people in the market have also, whether you're investors, right, whether you're users or builders, we've gone through quite a bit of change over the last 18 months. I think there's been a lot of pursuit of decentralized stablecoin. And there's various designs of it. People are excited and disappointed. And so just kind of want to hear, you know, as a layer one operator, and you were talking about how important stablecoin is, where do you think stablecoin is going to go from here? You know, is it going to be centralized stablecoin, continue to grow from here? Is there still hope to come up with new designs for decentralized stablecoin?
Yes, sure. I think first of all, actually, stablecoin definitely is one of our priority and focus right now. As you know, we have around more than $40 billion worth of stablecoin on Tron network. This has been our focus since day one. But I want to mention a very good example. Lots of people didn't even notice. Is basically, I think stablecoin is the best of the store of value for people in Asia. So lots of people based in United States probably don't understand that, because like in United States, like everyone can get a US dollar bank account, right? This is become basically like infrastructure for everyone, right? Just like the electricity, gas you are using like every day. You don't even pay attention to them. But for most of the country in Asia, you know, don't even need to mention the name. You know, people have no access to US dollar at all. So I will say like 95% of the population can only hold their own currency. So they can't exchange to US dollars, or if they have US dollars, is forced liquidate to their own currencies for most of the country. So there's no way for them to hold US dollars at all. But actually, you know, like a layer one solution can provide, basically blockchain can provide a very good way for you to have your own bank account, right? So before that, I think owning bank account has a huge amount of the cost. Not only financial cost, but also monetary cost, regulatory cost is very high. But right now, just doing blockchain, you can just get access to any open source blockchain wallet and create your own wallet in 5 seconds, and with basically zero cost, right? And then you can store your value in your wallet, as long as you don't tell your secret phrase to others, right? It's 100% safe. So I think this is a very actually revolutionary compared to the Asia like traditional financial infrastructure we have today. So that's why you have seen, for example, we have seen like recently the daily increase users and also the active of the chain for Tron increased dramatically in this year, 6 years. Even, I mean, for most of the blockchain is bear market, right? So probably the activity of the blockchain drop a lot. But we see consistent growth of Tron blockchain. I think it's mainly because these days, like Asia, lots of people in Asia started to get used to use the stablecoin on Tron network, and they feel comfortable with it.
100%. I think stablecoin is probably what's going to take us to mainstream. But I also want to hear from Saurabh.
Yeah, I mean, as I said, I think stablecoin is probably one of the kind of killer use cases, at least up to this point we've seen. So that is going to continue to gain mass adoption. I think, in my view, I think we'll probably see all three sort of modalities continue to evolve. You know, the pegged fiat-based stablecoins, which I think already are pretty sizable and serve a great purpose, have showcased the true sort of benefit of that, and through DeFi and kind of usability of that, and then obviously connecting the rails globally, and USDC, USDT, other forms that are sort of coming up, and I'm sure many other institutions are probably thinking about it or so forth. And I think that will continue to scale, just because from a retail perspective, I think they imbibe all the kind of elements that users want to see, sort of permissionless, kind of open, transparent kind of ledger that give access to a store of value in obviously emerging countries in many cases, or then simple, cost-efficient modality of transfer and payments. I think the second will be CBDCs. We're going to see more and more chatter about CBDCs, and you can't ignore it. And you know, there I think we'll see so many variations there, given they are going to be driven by national agendas, and you will see, you know, you can see the point of view of either fear or just see the amount of variation it's going to have of how people might make it more composable with the rest of the kind of new Web3 ecosystem or more controlled. But that is, I think most likely, or at least my view is, at least in maybe Western economies, they might serve the purpose of kind of wholesale and then might leave the private stablecoins for the retail purposes. But I think I'm still guessing. And I do think that there is going to continue to be experimentation and research on the algorithmic side. And I think projects like Maker who've continue to kind of test the use cases, because if you believe the world is going to get more and more tokenized or more assets are going to get tokenized, then they do serve a purpose of incorporating productive assets to a use case if designed. And Maker have been testing with Huntington Bank and kind of connecting the physical assets to that, so that algorithmic stablecoin kind of component will see experimentation and then might serve obviously niche use cases. So I think generally this is a pretty exciting phase, but end of the day, I think this is going to be the driver of complete rewrite of the payment money movement stack.
But did you feel, sorry to throw a curveball there, but did you feel there might be certain centralized risk though, given the influence of USDT, USDC, right?
There's going to be somewhat centralized what?
Centralized risk sitting with the issuers of stake.
Yeah, I think now we're going into sort of pitfalls and trade-offs in each one of them. Yes, so there is, these are private companies who are kind of managing, and then this is where how you shape regulation, where either you go and shut them down, or you create the guardrails of how to manage that risk and set up the requirements to be able to observe that risk with the understanding that this is helping innovation and this is getting adoption. But we now need to make sure that the risk is nicely captured. So what guardrails we're putting on those companies who are in the issuing game, but carefully not killing the innovation. So as long as that happens, I think these can survive. And this happens, I mean, banks are private, but they're nicely sort of captured. And this is probably a better form of banking coming up with the nice guardrails.
Yeah. So more oversight, more transparency. And that's a nice segue into regulation. I think given Sam is obviously in front of the Capitol Hill, right? And it seems like everybody's paying attention to how he ties his shoelace. But we're very, but it seems like FTX is doing a lot of heavy lifting in having active dialogue with regulators. And I think over the last 6 months, right, when the market kind of crashes, they also kind of triggered for a lot of the, I guess, less properly managed platforms, right? Risk were surfacing. So a lot of people in the industry were saying regulators are going to come down hard into the industry, given how many retail people are impacted this time around. So just kind of keen to hear from Constance, right? How's FTX or you personally thinking about regulation? How it's going to evolve? How you guys are influencing that direction?
Yeah. So from our perspective, even though the industry might seems like the regulator is coming after crypto hard, but from our perspective, I always feel like our working relationship with regulators should be in an open and friendly dialogue. Is a two-way communication instead of one way of them asking us what's happening. I think the crypto companies should all be proactively talking to regulators and tell them what's happening and how things works, so that collectively we are educating them together. So in the past year or so, my personal experience of dealing with regulators is a lot of time I spend on just teaching them basic knowledges about crypto, about Bitcoin, about Ethereum. And of course, they will ask us lots of questions. And one thing that I really admire Sam for what he's doing is he repeats himself constantly to the people on the Hill, to the people from the major banks, major governments in the world. It's always the same question, and it gets old sometimes. I'm not a particularly very patient person, but it really gets old. So I think it's not just about regulator coming down to crypto companies. It's also about us telling them what's happening and what this industry has evolved in the past 5 years and where it's going to go and what's our vision and mission, have already moved way beyond the ICO, shitcoin and scammy stage that everyone is actually building. So I got asked a lot about how do you feel about the recent market downtrend, and what do you think about the crypto market moving forward? Even though the market is trending down, but I think more people are building. It's a great environment for builders to build, and we see Ethereum emerge, we see fundamental being improved, and it's overall very, very positive. But does regulators know that? No, they don't. And no one's telling them that. And we can't rely on a few players to tell them that. Everyone has to proactively talking to them about this. So that's how I think about the relationship with regulators, and that's how we think about working with regulators. So FTX might have the reputation of getting licensed everywhere, but what we really want to do when it boils down to the root is to educate the regulator, help them think about how they should think about crypto and shape the regulation landscape to help everyone to grow. Because at the end of the day, like what Justin just said just now, crypto pool is tiny. And it is nowhere compared to any traditional TradFi pools that we are facing now. And it's nowhere compared to the technology space that the world is seeing now. And if we really want crypto to be a thing, to be a real thing in our life, we have to get bigger. And it's a collective effort. It's never 1 or 2 or like 10 people's effort. Everyone has to push it forward. So we, of course, FTX, we primarily as an exchange, we can only do, educations and pushing on trading primarily. And by doing that, we hope every regulator would understand crypto better so that they stop chasing the things that they shouldn't be chasing, and they allow crypto for actual building and actual space to grow and being adopted. So that's how we think about it.
So education is key. I mean, to be fair, I think the crypto evolves super fast, right? Everybody's playing catch up. So I think it's reasonable. Regulators are also playing catch up. I guess on the positive side, there seems to be encouraging signs. Regulators are having more open dialogue with market participants, right? I think that's a much better alternative compared to if they just come down with some regulation and nobody quite understand. But at the same time, I can see how it could be a challenge to harmonize, right, the rules and regulations in the crypto space. So
I think regulators are definitely getting more open-minded.
Yeah.
And that's great. That's great for everyone. Great for the space. Great for us. Great for them as well. So I think it's really everyone's effort to try to open the dialogue and shift their perspective about how to think about regulations. Because nowadays, when we talk about regulations, there's still a lot of negativity going on and talking about, oh, regulator didn't allow us to do that, didn't allow us to do this. So I think instead of waiting for them to shift their mindset, we should shift our mindset first and proactively talking to them.
Absolutely. Totally agree. And Justin, so I think you're also dealing with multiple, having conversations with multiple jurisdictions and all that. How are you thinking about this?
Yes, last year, the end of last year, I became the ambassador of Grenada to WTO. So I talked to ambassadors from different countries times to time. Recently, I participate in Ministerial Conference 12. So all the Minister of Trade comes to the conference, and I discuss lots of with them about how blockchain and the stablecoin transaction can empower the trade, and also really, I think for e-commerce, like all different kind of the industry, because crypto really enable a very good way for payments, especially global payments. I think as I just gave you like one of the example. So basically, anyone can get crypto addresses instantly by free, right? So empower them to receive like transaction from all different kind of the merchants worldwide. So that's why that's the message I always want to send to regulators. Blockchain is just like internet, right? So it's a very good technology with transparency. So if you use the blockchain transaction in a good way, actually can benefit everyone in the world. So even sometimes they might hesitate because of several reasons, because they don't understand how blockchain works, and they don't understand like the new concept comes out like every day, right? So, but I always tell them, just think blockchain like database, like internet. So basically, provide you a good way to track all the data, right? So even for bad actors, right? Even today we see some of the hack happen in blockchain industry. But you can see actually, even when the hack happens, there's lots of the way you can get the money back from like centralized exchange. They have all the anti-money laundering, chain analysis mechanism, and also for stablecoin, right? They can basically freeze the bad actor addresses. So there's a lot of way for you can actually mitigate the risk, but also provide these kind of financial services to mass adoption, actually benefits everyone, and at the same time minimize the risk of basically all the concerns they have. So that's why I think this is also very important, because we need to make sure the regulator is comfortable, so they can open all the opportunity of mass adoption to everyone.
Awesome. And so, Saurabh, you guys are based in the US, coming from traditional finance into crypto, and I guess being compliant regulation is probably front and center of the consideration as well. How are you guys thinking about it?
Yeah, I mean, regulation is very important. We very much support it. I think there has been very good history of thinking through these things. I mean, even when early internet protocols sort of came up, that was a collaborative effort. It was a deep technological stuff, but think tanks and policymakers kind of work together. Obviously, crypto moves much faster, so I think there's going to be some arbitrage. I think the only concern and my worry is to not put a plain blanket on everything. And crypto regulators, within crypto, there are so many different things, and the policy framework has to serve policies around every use case differently. Stablecoins is a kind of a different use case. Gaming and social economic models are a different use case. Thinking about digital property rights is a different use case. Thinking about digital sovereign identity is a different use case. So these are different policy frameworks and different thinking. And right now, it sometimes feels that there's a blanket regulation on all crypto, which doesn't really mean much. These are all independent kind of elements, and they will require sort of regulators to kind of. So we obviously we do a lot of work and kind of thinking about it, and obviously kind of sharing our feedback. Again, coming from a technology perspective, these are complicated technical things, and I think I understand that it takes time to kind of bypass that. But I think I'm hopeful that the next wave is going to be seen as not stifling innovation and creating policy frameworks to adopting each of these use cases specifically in what it requires to enable digital assets, which is now, you can't, you just can't ignore them in terms of property rights and financial inclusion, financial applications as such.
Yes, so more granular regulatory framework. Yeah, lots of challenges ahead, but also lots of hope. So, ladies and gentlemen, let's give a round of applause to our amazing panel. Thank you so much today.